So we'll launch the event formally. Hello everyone, I'm Terry Ryder, founder of Hotspotting, and welcome to this special webinar event today, in which we will be examining the residential property market in the current extraordinary circumstances. And in particular, we're going to be looking at what changes are happening in the world of housing and finance. Australian real estate consumers seem to have more questions about mortgages and interest rates and related issues than ever before, and they appear to have more questions about finance than any other housing market issue at the moment. We're all aware that banks have offered the possibility of mortgage holidays and other types of relief for borrowers who are in financial difficulty. But how does that work, and what are the consequences for people's credit ratings? Have lenders changed their criteria when assessing loan applications? Are people who work in particular industry sectors being treated differently to others when they apply for loans? So today we're going to be discussing those issues and a whole lot more. And we invite your participation. Today we have a panel of experts from different spheres of the real estate industry. So if you have a question, hopefully someone on today's panel will have an answer for you. So I encourage you to write your questions or your comments in the chat box or the Q&A panel that you have in front of you. So let's begin by meeting our panel members today. Louise Lucas, mortgage broker from the Property Education Company. Welcome, Louise. It seems that despite everything right now, you're super busy organising loans for customers because property deals are still happening.
They are certainly still happening. And if you're able to buy, there's some fantastic opportunities out there. So we've had 4 people buy in the last week, and it's kicked, and let alone all the refinances that we're already doing, but now, and equity release for renovations, lots of things happening. Yep, it's very positive, Terry.
Danny Buxton from 000 Property, welcome. You're sitting on the Sunshine Coast for the beautiful backdrop of the new Maroochydore CBD that will be in place hopefully sometime soon. It's already under construction. Danny, we were talking earlier and you were telling us that you had a conversation with local valuers and finding that the property market's holding up extremely strongly in your particular neck of Australia.
Yeah, look, obviously we, like everyone, we look all over Australia for what's right for our clients, but particularly here on the Sunshine Coast where we are based. We're just having a conversation with one of the directors of Heron Todd White. And we're just asking about how is he seeing things, and actually mentioned this webinar today and said, hey, mate, I'd love to get a quote. And he said, mate, you can say this, that residential values have not dropped at all on the Sunshine Coast. In fact, we do not certainly see them doing so in the foreseeable future, especially in that sub 750,000 price range. And then he went on to give me some examples of properties that have come on the market and have sold very quickly. And like all of us have seen, there's probably people in the general market are probably not necessarily putting their properties on the market at the moment. They're happy to wait as there's a bit of uncertainty, which means that the housing stock has tightened quite considerably. So there are still people out there buying, and still people need to move into property. There's still people needing to rent. We've got 2 properties that are under construction at the moment that we've just literally put on the rental market and have already been snapped up and are being rented. Already have applications before we've even handed over the properties. And so I think certainly the media and everything that we're seeing, that negativity that we're seeing in the media is actually not as true in some aspects. I think there are markets that will hurt, but overall we're still seeing things that are still very strong. And that's certainly
I think media's ever accurate about what's going on in markets, but particularly right now. Chris Christophe from Reventon, you're based in Melbourne, but I know your business is active in markets around Australia. So what are you finding at the coalface, Chris?
Well, look, further what Danny's saying, I think the Sunshine Coast and Louise as well is a fantastic market. And from a finance perspective, our business is going gangbusters from that point of view. We had our 3rd best month and we're very close to beating in terms of our lodgements since September 2018. So from a finance perspective, it's a great time to be looking at borrowing money with the rates being so appealing to investors. Where to invest, I think, is very important. And we are having a strong push at the Sunshine Coast because we think so much is going on there. And with the price points that we're selling, particularly, which is the 400,000 to 700,000 mark, I don't think if any price drops there'll be whatsoever, but it's only in the short term anyway. So we're talking about real estate as a 7-10 year proposition, and property will always stand the test of time. So when there's so many negativity around shares and all other investment forms, people are a lot more positive towards residential real estate. And we talk about the banks, what the banks do, they assess risk. If banks will still give you 90-95% against a residential piece of real estate, that says it's safe and secure, because they know how to mitigate risk better than anybody. So from our perspective, business as usual. Buyer sentiment is very negative based on everything in the media. But who do you speak to? It's important to go speak to the right professionals that are in the cold front, that are speaking to developers, that are speaking to lenders, and they can tell you exactly what you can and can't do. So that's what we're finding. Our business, from a real estate point of view, it's a lot harder to get the deals. From a finance point of view, as Louise said, the business is going gangbusters, and most of it's people's negativity or skepticism. What's going on? How long is this going to go for? And I asked the question, great question, how long will it go for? 3, 6 months? We're talking about a 10, 12-year proposition being real estate. It's not much in the scheme of things. And if you look at the Sunshine Coast, like Danny said, there hasn't been a price difference in the valuation. Get involved now. It's a great time to buy. And there's great incentives. We've negotiated some amazing deals with developers that in different climates and markets we will not be able to get.
Yeah.
So,
yeah.
Get involved.
Okay. Alex Dutt from Adviseable, buyer's agency. Welcome, Alex. You're based in Sydney, but you operate around the country. You're buying properties for your clients in all parts of the Australian market. What are you finding at the coalface?
Well, look, I mean, as others have said, deals are still very much happening. So the buying process has definitely changed. And we deal predominantly with established properties. So obviously with auctions being cancelled and group open homes and things like that, we're also seeing that agents are really very much pre-qualifying buyers more than ever. But deals are very much happening. I think that, you know, the idea that there's some kind of people panicking and things like that, we're not seeing it. I mean, I've seen a few isolated cases of panic sales and even more oddly panic buys where people are looking to cash in pre-approvals, but it's very much the exception to the norm. I think that the market has, in a general sense, shifted to be a buyer's market. So as others have touched on, there's some fabulous opportunities. You just need to have that, you know, the mentality, the counter-cyclical mentality to say, okay, everyone else is maybe being very conservative and pulling back, but you know, maybe the time to jump in because there are some great opportunities. And as others have touched on, I mean, we're not seeing any valuation issues. I've been able to negotiate some really good buys. And, you know, sellers are aware of what's happening. So, you know, the deals are there to be had. It's just a matter of, you know, having the gusto to jump in and buy.
Absolutely. Look, one of the words you used, Alex, was opportunity. And Chris Christophe from Reventon, we were talking about this a little bit earlier today, that with your business and what the message you're getting out to your clients is this very much is a time of opportunity in the future, or the near future at least, will belong to those who look at this particular so-called crisis in that way.
Yeah, I believe that from a business perspective, but a buyer's perspective as well. The opportunities you can have with developers, which we can touch on later if we have the time, we've put some, as I said, amazing opportunities as close to risk-free investment as possible. But from an owner's perspective as well, it's a great time to look at acquiring businesses, people that are nervous and not taking advantage of. I'm looking at 3 deals next week, an accountancy practice and 2 finance books to expand Reventon as much as possible, because now's the time to really grow and expand. And I'm personally very optimistic, so is my team, about the next 6 to 12 months and what's ahead. Like Warren Buffett says, when everyone's pulling back is the time to attack and be aggressive towards the market. That's a buyer's market from the client's perspective, but also from an owner's point of view. I'm going to be more active in the next 3 months than I have been in the last 15 years in business.
Okay. The key word, I think, is opportunity. And Louise Lucas, mortgage broker, in terms of opportunity for people wanting to get into real estate, in the world of finance, what are the opportunities that are being presented?
Gosh, I've got one of the best things we're seeing, and I know you're mainly targeting investors, Terry, but I've got to tell you, for first home buyers, there couldn't be a better time. I've got a young client who's not only can borrow at 90 to 95%, he's bought a property that's under 5 years old, so new, in effect, and never been achieved the grant before. So he's actually getting $10,000 back for from a first-time buyer's grant, plus he's getting the government to pay his lender's mortgage insurance because he's borrowing over 80%. You know, the opportunities for someone like that is insane. They're getting into the market and they've got a vendor who's scared. And the other thing that people are scared of is real estate agents are scared. They're scared they're going to lose, you know, the deals. So they're actually pushing them ahead a lot quicker than they probably need to. And we are killing it. People are buying left, right and centre really well for, you know, 1 minute they're saying, oh, we couldn't possibly sell for under 900,000 and suddenly we're selling for low 8, you know, and it's just happening lots and lots. Or, you know, in the 5 to 6, 700 mark, there's huge potential. You'll get something that up to 100 grand below if you get the right vendor who's scared and the agent's scared because they don't know what they're doing, which is pretty typical, I'd have to say. But anyway.
Okay, so very much a time of opportunity for those who have the ability to think and act independently of the herd. Alex Dutt, you mentioned that the process of buying property has changed in the current climate. In what way has it changed?
Well, I mean, auctions are off the table in traditional form. So some agents are doing online auctions, which kind of may or may not be very successful, but other agencies, I mean, in my neck of the woods in the inner west of Sydney, one big agency has just flat out cancelled any auctions. They're doing everything by a private treaty, which is quite abnormal. But also open homes. So open homes, group open homes have been cancelled. We're finding that agents are really, as I might have mentioned, pre-qualifying buyers. So putting them through the ringer before they even let them look at the home. They're embracing a lot of technology, so virtual property tours and things like that. But also in terms of the actual negotiation process, that's changing a lot as well because we're losing that transparency. You're not able to actually eye up other buyers at open homes and, you know, that type of thing, which, you know, is traditionally quite useful. So really, if you're not experienced in buying property, it's almost like, you know, a stab in the dark. It's all done via remote means. Obviously, as a buyer's agent, I do that all day long, so that's fine. But if you're doing, you know, if you're not doing this all the time, you know, as a buyer, it's going to be a difficult thing to navigate and most importantly, be able to get a good deal.
Okay. So Danny Buxton, 000, I'd like to put the same question to you. How do you find that the process of buying property has changed in the current climate?
Certainly doing a lot more of these Zoom meetings and embracing technology. But for us, it hasn't really made a huge difference in the way we do business, bar the fact we would really recommend, and I know that Chris and certainly Louise would suggest this is the case, is just make sure you're really financially got your finances all sorted now and use the opportunity to just get your pre-approvals in place. Make sure if you're not in a good, you know, if your job is a little bit uncertain, I would say probably not a great time to go through the process. But if you've got good, strong employment and you're in a good position, it's a great time to buy. People are still a little bit nervous, and I think there's a little bit of obviously with all the media and the negativity, I think that people are asking a lot more questions and are probably sitting on the fence. But as Chris alluded to, there are some great opportunities out there. You know, we've got some builders who have done put and call options on land, and you know they're quote unquote happy to drop their pants to, rather than settling on the land themselves, they're happy to do a deal. And you know, we're seeing that benefit that's going to, you know, go to our clients. But all in all, I think it's just a great opportunity because this too will end, you know, and when we come out the other end, we're going to go through a very, we believe there's going to be a lot of people looking to property as a safe haven for investing. It's secure as long as those fundamentals are right and are in the right areas. Areas like your Geelong, your Ballarats, your Bendigo, these areas we've been talking about pre-coronavirus. Sunshine Coast, you know, those areas that are satellite cities, you know, people are going to more than happily working at home, and then maybe instead of driving into the office every day, they now might only drive to the office 2 or 3 times a week rather than every day. And so I think things are changing, but we've also got to make sure that we adapt. And for us, even when we're looking at designs for houses, that we're adapting for that home office scenario as well. So, but look, builders are still building, developers are still put down land, and you know, if you buy right, you buy smart, you can do very well long term.
Can I just add to that, Danny? You know, I've had a couple examples of buyers that were unable to settle due to losing their job, and we were able to nominate those contracts in Victoria. They've made substantial gains, like tens of thousands in some cases. So having that opportunity, what you wouldn't have had in this different market, we're seeing more. We've had two of that in the last month where clients were unable to settle. We nominated the contract, and the incoming purchaser made substantial money because this was purchased 12 months ago.
Yeah,
so land value was a lot less.
We can't do that in Queensland. That's one of the unique things of Victoria. One of the things we do talk to clients, probably one of the things that is changing is probably from a contractual perspective, where our clients are now, we're putting an additional special condition into the land contract, which is I guess a COVID-19 clause, which just really protects the client around or dealing with suspension of time for performance. So in the event that there is a delay because the banks or there's a delay with finance or doing normal business because of the COVID-19, that the purchaser is not going to be penalised financially in any way. So it's very important that you do talk to your lawyer about that before you sign a contract. And a lot of the lawyers are now providing additional information to their clients around COVID-19 pandemic and how they just need to be aware of that without just of their obligations and just making sure, as I said before, you know, check the fine print with your financier. That's why it's really good to use a broker who can then make sure that when you get that loan offer and you've got that pre-approval or you've got that full approval in place, that you know it's sufficient and there's not some fine print there where they can retract that.
Yeah. So, Louise, as you know, I always think that people should always use a mortgage broker. I don't know how people can find their way through the maze of the different lenders and their deals and interest rates and other factors. But I think at times like this, more than ever, it's really important to deal with someone who's out the coalface and is understanding the changes that are happening every day with the world of finance.
Well, one of the things, Terry, is NAB was saying just this week that 90% less activity is occurring in their branches. So if you wanted a loan, a home loan, you're not going to a branch at the moment. You're certainly dealing with a broker. And most brokers are used to dealing like this. They're already running businesses and being amenable at time periods to people. We meet on Zoom. We can ID people on Zoom. So that's a great bonus that's come in. Previously, some of the major lenders would insist that you had to personally meet the person, and now that's all gone out the window. All these rules that they had in place have been able to be changed overnight, which is a great blessing. The one condition, though, but picking up on what Danny said about putting something in your contract, the one thing I would advise people, one of the things vendors are wanting is you to go unconditional and finance immediately. If you're a strong purchaser, that's great. But the one thing I would ask you to keep in your contract is that the valuation is at purchase price. Yeah. Because there is a possibility that the val could come in short and then your pre-approval's worth nothing. And if you haven't got enough to fund the difference. Oh, actually, and on that point, most pre-approvals aren't worth the paper they're written on. Can I just say, because they're an automatic. If all they're doing is a credit check on you. Most of the lenders do not do a full check on you in a pre-approval. So you need to get someone like a broker, experienced broker, to actually assess you so that we have a full understanding of all your history, so that there's nothing there that's hidden that might cause you problems later on down the track. So that's just a thought. But I would definitely advise people, make sure the clause, no matter what else, and we can get a val done in 2 days. And yes, valuers are still attending some properties, depending on the property, but most of them now are reverting to desktops if they're within the realm. So that's great. If this is okay for established property, a bit harder for new, but anyway, but they're still going out and doing valuations. Like, we can still do inspections. Yeah. And for once, real estate agents are having to work really hard to actually find out and know your buyer, which is a great thing. It's actually helping the market, and actually getting people to actually communicate one-on-one is fantastic. It's a much better way to sell and be involved. Anyway. It has
changed the market though, Louise. With all this going on now, it's become more acceptable to do these Zoom calls with our clients. Obviously, the 100-point check ID is important, but the way we're doing business, it's changed. And I've heard a few people say, which was intriguing, the way we did business will never be the same. Now, that's a question mark. I'm not sure if that's the case, but it's definitely changed the landscape on how we deal with our clients, how we deal with everything. So that's a good thing from, I guess, an owner's perspective, because now everyone can become national. Everyone can deal with more buyers. It changes our landscape of what we're doing so drastically, which is exciting. And will it ever go back to normal? Who knows? But it's definitely changed the way we do business in every sense.
Well, we were already dealing. Sorry.
Sorry, Lewis. I think the people that are actually now going to do stuff, they're actually, who are actually out there interacting and engaging with each of us in what we do. They're genuine. They're not tire kicking. They're actually really wanting to do something. And so it really is weeding out the tire kickers out there who are just wanting information, as opposed to those who are actually wanting to take advantage of the situation that's there. And, we find, whether it be the special disability stuff that we do, or whether it be just your traditional investor or your first home buyer, is the people that we're now talking to are those who are really focused on wanting to do something, and it's that conversion is far greater.
I think what Alex was saying before about the pre-approvals. Alex, you were saying that before about buyers are a lot more prepared, their condition, they're coming in to buy, or when they're renting their properties as well, the applicants are a lot more, there's a lot less tire kickers, and that's a good thing, and it's good for everyone, I think.
Yeah, look, the way I'm seeing it is that there seems to be, the market seems to have shrunk a little bit. And what I mean by that is that there's fewer sellers in the marketplace and there's fewer buyers, but the deals are still happening. But people, like you said, there's, as Danny eloquently put it, there's less tire kickers. There are less people wasting time. There are people that want to do stuff. And it's interesting because you might think, at a surface level, that the concern from investors would be about capital growth and how's that going to shape up. I'm not having those conversations. The concern that I'm getting from investors is less so much about that. They're coming to me and saying, well, we see the opportunity. Where is it? How do I get my hands on it? But the thing they're concerned about is more about tenancy. So coming kind of off the back of what you guys were saying about some of the special conditions you're putting into contracts, in addition to that, we're looking at putting in special conditions around making sure that we get a tenant even before unconditional contract. And if you had proposed that to a seller, before Christmas, they would have laughed you out of the, out of the office kind of thing. So we're doing some interesting things, but on the back of that, settlements as well, extended settlements. So I had a client that I was buying for, coincidentally, in the Sunny Coast. You guys have been talking that up, which is great. So I bought in the Sunny Coast, really good deal. He was concerned about tenancy risk. We negotiated a 120-day settlement. This is on a standard established property purchase, a 4-month settlement, which again, 6 months ago, they would have told you on your bike. But this is a way of kind of thinking laterally and mitigating some of the risks. But I'm just finding it interesting that, again, the conversations and the questions that are coming from investors are not about long-term capital growth, the value's falling, how's it all going to shape up? They know that there's an opportunity there and they want to get on board. It's, okay, how do we mitigate some of the risks? And just quickly, with the finance side of things, as Louise was saying, it's absolutely essential to obviously have your finance in place. It's absolutely critical, as you guys have touched on, but also, in time frame. So although people think of, okay, what's a good deal? That means we're getting it at a very good price, but also we've got to negotiate those other terms and conditions around finance as well. So not just tenancy, but finance. So extended finance clauses and extended settlements, because you guys will tell I'm sure you'll expand on this, but the banks are not fast at the moment. So,
now hang on, it depends which lender you go to. So there's quite a few lenders that we're dealing with, we get a 2-day approval. So sorry, I don't buy that. I can still get them done. It just depends where, and we're getting the best rates for those as well. But the
rates are fantastic, yeah. I guess it's a mixed bag. I'm doing SMSF purchases as well. So,
oh God, yeah, good luck.
Yeah. So I've got 4 SMSF purchases on the go at the moment. So
you.
That's all the grey hairs, you see.
Yeah, that would be. But there's plenty, although some lenders have had their major offshore processing teams fall over completely, all those staff who are not being used in branches and everywhere else are now back on track dealing with customers and loans straight away. So it will catch up. It depends on the lender. But if you need to settle quickly and you have the finance, you have a good position, then there's certainly lenders who will deal with it. I submitted a couple Monday, I've already got approval. Hello, you know.
I think this is also a case in point of the importance of having a qualified and competent professional on your side. So I think it's more important now more than ever. So if you think you're going to be able to navigate the kind of market on your own without knowing the intricacies of what's happening, because as I was saying before, the deals, they're not out in the public. Most of the listings that we're seeing are pocket listings, so they're off-market listings. Yeah. So everything's happening behind closed doors. So if you're in the general public and you don't have access to the portals and things like that, or even just tapped into the industry to know what's actually happening out there, and if you're only reliant on the media, then you're going to be great. So it's really important. So I think that touches on an interesting point. You need to have a good professional on your team, and obviously a good mortgage broker.
I'd like to also just mention too that not only is it a great time and there's great opportunity there, is money's never been cheaper.
Oh, God, yeah.
And it's just incredible the rates that you were able to get out there with the banks, with fixed. I mean, what is it, Louise? You can get some banks are doing 2.19% fixed.
2.09, 2.14.
Well, I've never seen money this cheap, which means
for investors, 2.29 you can get.
2.29, which means that your property.
But hang on, this is principal and interest and whatever, and you've got to fit the criteria, and there's still fair. So that's not the comparison.
Amazing rates out there, and what we're seeing is properties are cash flow positive without even including the tax add backs that you can get in. And again, going back to what Alex said as well, and all of us have been saying, buy in the right areas, still stick to the main fundamentals of where you're looking at. As I alluded to earlier, we've had 2 properties that are under construction that we've already got leases on. There's 0 vacancy. We always say to clients, look, when we settle on a brand new house, allow 4 to 6 weeks. Very rarely do we ever even get anywhere near that because we're going in the right areas. But people who were giving notice to leave have decided to stay on some of the properties in our rental book. And funny enough, our arrears in our rentals are actually less than what they were 6 months ago, because we've been proactive talking to our rentals, we've been talking to their clients and communicating to the tenants, seeing how things are going and working with those who may be going on to job seeker or job keeper. And remember, that's tax free as well. They're not paying tax on that. And so for some people, they're actually better off.
Yeah, I did want to add on the back of that, Danny, I did mention that it is a concern that is, buyers are coming to me and saying I'm concerned about tenancy, but so far it's unfounded. I mean, I haven't fielded one call from our database of an investor that's come to me and said, I've got issues with my tenant. That's not to say it's not happening out there, but it's not a common occurrence. It's more about the sentiment, I guess, and that's what I wanted to.
We have business owners who are renting, and they've come to us really on where their business was shut down, but there's our government's thrown a lot of money at different things. I don't agree with all of the policies. I know in Queensland, the Queensland government's looking at potentially putting something in play which is not supporting investors. It's really just looking after the tenant, and there's a lot of backlash in regards to that from the REIQ and agents. And at the end of the day, though, is if you've got the right people around you and you've got your A team there working with you, you've got a good property management team, you've got a good buyer's agent or whatever, you've got your right finance team around you, and you're doing the research. End of the day is the fundamentals are still the same.
Just one point about that, Danny. A property manager doesn't get paid unless the rent's been paid.
Yeah.
So a good property manager, and you want to be the owner or of the property or the landlord that they like. You don't want to be that smart ass who never repaired anything and is a pain in the ass to deal with. So that's a good lesson to a lot of investors. If you were difficult and then your agent doesn't particularly want to help you, then there's a reason, and maybe look in the mirror. But there's a lot of great property managers out there doing the right thing and trying really hard, because otherwise they don't get paid. So
I think we could have an entire 1 hour discussion about the issues around tenants and the changes that are happening and some of the things coming out of state governments are particularly unhelpful at the moment. But if the industry mobilises and lobbies hard, we can see them overturn some of those decisions, as we did in Victoria just in the past week, where they made an announcement banning pretty much all inspections of properties, and that was overturned within days when it was pointed out to them by the industry and by vendors just how crazy a decision that was. But today we really are supposed to be talking primarily about finance. So perhaps if we could turn our attention to some of the more specific questions around the whole issue of getting loans and people who already have loans and have issues to deal with. So firstly, a very general question, Louise, I know, but to start the discussion, has it become easier or harder to get a property loan in this climate? I don't know, it will vary from person to person and from lender to lender.
It does. One of the things I'm finding is they're asking for a lot more detail. If they've got an excuse to make it, they want to have jumped through every hoop. So as advice to the listeners who are going for loans, please clean up any credit card activity. And I gather, like, you know, most people are supposedly all on not only Netflix, but Pornhub and numerous other things. Just remember that anything you've bought on credit, your lender will see. And they're asking, even if they're not refinancing those credit cards, some of the lenders are asking for 3 months of statements to review. And that is a real issue if, you know, depending on what you've been doing. So it's a great time to sit down, review those activities, and maybe clean up your act for 3 months so that you have a clean run at getting a loan.
But isn't this a perfect time for people to do that, though?
I know, who wants to? But this is the time, it isn't.
But I mean, what a lot of people are finding is we've got a situation where they're being forced to save because they can't go out to restaurants and pubs and clubs.
That's right.
And they're finding that at the end of the month, they've got more money left over than they have had before. And I think it's giving people a clue to how you actually get a deposit together if you curtail some of your more extravagant lifestyle. I think it's actually a huge benefit that's going to come out of this period.
You're absolutely right. You are so right. And one of the things is the media has been so negative about people getting into the market and putting people off even trying. And once you show them how, they're like, oh, well, I could have done this years ago. I go, exactly. It's an even...
You know, one point, guys, to mention, I always say this when I speak as well. If you're not currently working, when you retire, you've got 38 hours, 40, 50, depending on how many hours you work, more time on your hands to spend more money. Now that environment's taken from us. It takes 42 days to create a habit. People are going to be home for that period of time. So what we're encouraging people to do is audit your business and audit your personal life and your spending. Because when we come back into normality, guess what? You now have good money habits. You know how to save money, and you can actually use that money towards paying off your mortgage or buying investment property. So now's never been a better time to audit personal expenses because you can't spend any more money beside food. Now's a good time to develop those great habits to get into the market, to pay off your mortgage. So now that I speak to my clients, I say to them, now you're forced to do that. Will you keep these habits when we go off this COVID-19, when these restrictions are lifted? Can you maintain those same principles? Because if you can, well, then there's going to be a lot of good things for you and your family to come because you're going to save money.
I think a lot of benefits are going to come out of this period, and I think that's very much one of them. So, Alex, if with your clients that you're representing trying to buy properties in different parts of Australia, are you finding that that finance is more of a hurdle than normal, and how is it affecting deals?
I wouldn't say it's more of a hurdle. It's just, I mean, my experience is it's taking a little bit longer in the sense of, like, for the reasons Louise said, that, you know, they're asking for more hoops to be jumped through. So I just think that you need to have your ducks in a row now more than ever. But you know, that ties in with what I was saying before, and that is that, you know, agents are wanting buyers pre-qualified. So if I'm able to go to an agent and say, look, I've got a pre-qualified buyer, they've got their finance ready to go, we're good to go, then there are good deals to be had out there. So I think that's an advantage. But also off the back of what the others were saying, and that is that money is absolutely cheap at the moment. I mean, you know, if you told me when I was a mortgage broker many, many years ago, and if you told me that interest rates or you know, would hit the low twos, wouldn't have believed you. You know, so I think it is amazing. So even with P&I repayments, as Louise mentioned, it's still their positive cash flow. You know, and Danny touched on that. So cash flow is very good. Yields are not dropping. Yields are very strong still. So you know, the finance metrics still stack up very, very well.
I think the key is not to be greedy in that process. When you're renting a property, don't be greedy in your rents. And it's not, I mean, the principles that we're talking about are principles that we all follow anyway, even before COVID-19, you know, this crisis. You know, it's always smart to have all your ducks lined up, get your finance done and sorted. So it puts you in the best position to negotiate. I'm interested though, Louise, too, on because some of our clients who have or some of our owners who have expressed a little bit of concern, we've always said, look, why don't you have the conversation with your broker, talk to your financier about if and when something does happen, rather than making a knee-jerk panic reaction to something, have the conversation now about if you went on a payment holiday, because the banks are doing some interesting stuff around that, what does that look like? Because not all banks are the same. They're not all treating this the same. I know CBA, for example, it is literally a deferral, and they're even paying the capitalisation for you. Not all banks are doing that, and the terms are very different. And so it's really important to get the information now, so when you do make that decision, it's not made under stress, but with the information that you have. Are you experiencing that?
Well, two things I want to bring up with what you've just been saying, Danny. First up, I've got to say, after the Royal Commission last year and all the tragedy that came out of how the banks have treated people, our Australian banks, we should be really proud of them, because they have stepped up in a big way and are helping people that they've never even had the means, supposedly, or the ability to do so before. And they are suddenly being able to convert loans that were, there's no way we could change that from a, principal interest to an interest only, or we can't give you an offset account because you've got the wrong loan and you've got to reapply, and all that sort of nonsense has all gone by the by. And suddenly they're able to do things and help people so much easier than they were before. So I've got to say we're very lucky we're in this country which has such a strong banking system. So I'm very grateful. But you were highlighting about, now I've lost my train.
Two things is you could just talk about the deferral of
the honeymoon thing. Okay, that's so important. There's a couple of key problems with honeymooning. And one of them is a person I know recently asked for a honeymoon on their loans because they go, oh, that's convenient. How great. I don't have to pay interest for 6 months. But then is supposed to settle on a loan within that 6-month period on and off the plan purchase. Well, hello, you're not going to get a loan when you're just taking a holiday. So you need to have a bit of sense and planning in this. And maybe it's not the best option for you. Taking a honeymoon, a lot of it's not a real honeymoon. A lot of them are capitalising the interest.
Yeah.
Most people who ring up are just scared and they've heard it's an opportunity. So I think, oh, quick, I should take a honeymoon. But they're not actually thinking about the process in the long term. And what they maybe should be looking at is a different strategy. So maybe they need to go to interest only for, a period of 6 months or 12 months, just to help them muddle through, rather than, and there's so many, look, over 2/3 of Australians, which they don't like to tell you, are 2 years in front, approximately 2 years in front on their mortgage repayments.
I was just going to mention that, Louise, because I actually went and had a talk to my bank and realised that I'm still paying my repayments on some of my investment loans at this level, where now my minimum repayment is this level.
Yeah.
And so I'm so far in ahead that you can then, quite easy if you want to, you've now got a little bit of a war chest, you can then utilise and play if you need to.
Well, on that, Danny, I've been advising people, if you think you're going to be under stress in any time in the next 6, 12, 2 years, pull that money out of redraw, put it in an offset account, then you have total control over it. And you can reduce your repayments exactly to the lowest level, but you do have to negotiate, and that's no problem negotiating these with the lenders. They're great about it. But it's actually, they won't reduce your repayment automatically. People go, why am I still paying this? I'll go, because you haven't told them. And their default position was, well, as interest rates are going down, Australians are actually paying, yes, you're right, at a higher level. And so they're actually way in front. So the most people have money. The majority of people with loans are very in front on their repayments, and they have a buffer in the system. They're just not aware that it's there and how to use it. So that's why you need to actually communicate to your financier, speak to your broker and have those conversations and get a clear picture of where your finances are at.
I'm actually surprised how few people have actually taken advantage of this offer to have a honeymoon period, to have a holiday on repaying their mortgage. According to what Matt Common, the Chief Executive of the Commonwealth Bank, was telling us earlier this week, that he says they've got $1.8 million home loan borrowers, and about 70,000 of them have made inquiries about having some kind of a holiday, but that's less than 4% of their total customers they're actually applying, taking advantage of that opportunity, which I thought was a very low figure. And it suggests to me that there's fewer people out there in distress in these times than the media would have us believe.
Can I comment on that?
Sell newspapers.
Sorry, Danny, go on.
I said, doesn't sell newspapers having headlines like that?
Yeah.
I mean, in relation to that, we're saying to our clients, unless you need to take that honeymoon period, don't take it, because all you're doing is compounding this issue for later. Should I take my super out now and later? This is money that's in your super for your retirement, which is going to have a compound effect. Why take it out now if you don't need it? The most important thing to do is get that information, get that advice, and don't wait till the 12th hour. But if you don't need to take that 6-month honeymoon period or don't need to take your super out, why would you do it? It doesn't make sense. That's the money that you've saved for your retirement or to get ahead of your mortgage. You're just compounding the effect in 6 months later. So that statistic of 4% doesn't surprise me at all, because we've had some clients call in and try to take advantage of that fact. And we've said, before you do, let's analyze the situation. Do you need to take advantage of this fact? And we've advised them, we don't think you should at this stage, because you're just compounding it later. It sounds all great to have a honeymoon period. Don't pay your rate for 6 months. Take out your super. It all sounds fantastic. But what's the flip side to that coin? What impact is that going to have on you in 6 months? What compound effect is that going to have by not being in your super? They're the things that we're talking to our clients about. And everyone on this panel has mentioned, it is paramount now more than ever to get the right advice. Speak to your professionals. Go over your situation. Understand, do you need that honeymoon period? Are you in a point of distress? And then discuss it.
Well, just on that, there are circumstances where a honeymoon will work for people. And for example, I've had a young client who started her business only earlier this year. She has huge earning potential for later in life. But for now, she's just started and it's hard. And so she can take a honeymoon. She's got investment loans and home loans and buffer herself. She's got a small buffer, but this will help her create a larger one, build up the equity that she needs to maintain it. And then when she's back, she'll actually have huge earning potential when the market slowly recovers, and then she'll be able to pay in advance later on. But if you think you're struggling now and you're not going to be that much better off in 12 months' time, seriously, you're going to have to look at some other strategy, because that isn't going to help you. So don't be taking a honeymoon and then thinking, oh, I'll be right in 6 or 12 months. Maybe you need to look at that long-term plan right now.
The biggest concern that people are expressing about the whole honeymoon idea is that it will put a black mark on their credit rating. There's been various responses to that from the APRA, etc. What's the reality of that situation?
Well, the APRA have said, the Australian Prudential Lending Authority, who controls all lending rules around with banking, have said there will be no marks on your credit file if you haven't been paying. But here, people, they know you haven't been paying because they can see it on your credit file. Now, you should all be accessing your own credit file at mycreditfile.com.au and get a copy and get alerts on what's happening on your credit file. But they mightn't use it against you, but they'll just ask more questions. So just be warned, that'll be fine. There'll be no mark, but they'll know. And maybe they'll just be saying, well, how do you intend? And you'll need to jump through the hoops to prove you are absolutely on track and back at it, It
would be a high risk too, wouldn't you, Louise? If they see that, although they can't put a mark against you, it's going to go against your future borrowings, especially if you bought a property. So they're gonna ask more, 100%.
I just think they're just going to they can't refuse you as such, but they just might make you prove more categorically that you have no doubts in there. There's no doubt that you can afford the new loan or else. And while responsible lending provisions have been put aside for the moment, because lenders have been doing some fantastic things, don't get me wrong. Clients who have purchased and are unconditional, some lenders have said, well, no, you've notified us you've lost your job, we're not going to proceed. But other lenders, and namely the big banks, NAB and CBA, have stepped up and said, no, hang on, if you are in an industry that we expect will come back and you'll have a job in 6 to 12 months, well, we will hold you so you don't lose your deposit, don't let that fall over, and we will help you purchase, and we will put it on a honeymoon straight away. Now, that's an amazing thing. That's a huge bonus that they're giving people. So whatever you're doing, don't deal with these things alone. Always ask for help. That's the main thing to get out of this.
it's a great time too to have a conversation with yourself, Louise, about should I fix my interest rates as well? Because as I said, at the moment, seeing these fixed rates so low, if you've got a long-term strategy, it just gives you some certainty in repayments and stuff like that, which again, everyone is different. Everyone's circumstance is different. But again, having those conversations, understanding the facts so you can make a proper informed decision.
No, well, it's true, Danny, because variable rates, people are going, oh, it should be, the same as the fixed. Well, no, they're not. There's reason why the fixed rates are offered low, and the government offered 3-year bonds and lenders took them up on it. So that's why we've got some awesome fixed rates in the market at the moment. And while we don't expect rates to head up anytime soon, we're thinking they're going to sit there for a couple of years. We would also expect that the variable rates are in the high 2s, not the low 2s. So maybe you take advantage now and lock it in and get those 3 years of repayments down and paid for.
Anything under 5, I still think is amazingly low.
Oh God, don't we? Yeah. For those who paid up to 17, 19, back in the day, God knows. Yeah, it's insane.
I'm old enough to have owned real estate in the late 80s when you were paying 17%. So I think it's a message for young buyers. The sort of interest rates are available right now are mind-bogglingly good, and it is an opportunity, particularly for first-time buyers. I think you pointed out a little bit earlier.
But also to pay debt off. Like, don't get stuck laden with that fallacy that, oh, we don't pay debt because it's tax deductible. Get in and pay some of your debt down and really get the benefit of this circumstance while you can. If you've still got a job and you've got renters, most of my owners have tenants all in place. They're doing really well. It's amazing. So
you mentioned, again, I think it's a really great strategy is having an offset account. And really just pump as much money as you can into that offset account, because you can tap into that and you can use that. You just got to be disciplined.
Yeah, and there are fixed rates available with 100% offset. That's another thing, Danny. That amazing. Not every lender, but just a few. But watch out. Most of them don't.
For those who are in a financial position, then there is really, in my view, very compelling evidence and compelling reason to actually go out there and look for those opportunities, look for those properties. Again, still have that long-term strategy in play, have that focus of what you're wanting to do. Don't, trying to get in and get out very quickly and make money is not property. It's a long-term focus. But also to buy in those areas that we've been talking about for a long time, look at those reports that Terry puts out, do your research, talk to valuers, talk to those that know what they're doing, the experts, and I just think there's just great opportunity out there, going back to what we were talking about at the very beginning of our conversation, with developers, with builders, with vendors who are putting their older properties, who might have a little bit of fear or they're not too sure. There's just great opportunities there. And
just on that though, we've asked about people, when you're calling your lender, if you're asking for a honeymoon or a rate discount. So most of them will say to you, oh, we can't give you a rate discount at the same time as we're giving you a honeymoon. So can I give this piece of advice to people? Ring your lenders and now ask for the best discount there is. And in some circumstances, it's worth breaking a fixed rate loan. There are still cash rebates available at some lenders, but these are drying up. So very recently, we were getting great amounts of cash to move people up for $3,000 a property at some lenders, for others, but a lot of them are closing off. So the majors are no longer, offering them as much. So be aware of that. But it might be valuable for you to consider breaking a fixed rate loan than if you had it at a higher level, pay the penalty, because the lender borrowed that money at that level. That's what they have for you. But maybe pay the penalty, but then lock it in at a much lower rate.
Question, Louise. Question on that. I want to ask your opinion on something. So I have mine on it. What the break cost to a client? What would you say is the right decision to make if your break costs X thousand? How many months to recoup your money for the people listening?
Oh, you have to do the sums each time. So
12 months would be a good enough reason to pay those break costs. You save that money over 12 months. What would you say?
It's a great question, Chris, but you have to actually assess what is that person doing with that property, because there are penalties in changing your loan, and are we hanging on to that? You've got to always watch out for the, divorce and death and any other circumstances that might jeopardise the fixed rate loan. So it's a bit more complicated. We do a proper assessment on the whole catastrophe of your life and so that we can actually assess and then see what the penalty is and how much is it worth it. And often, if you've got a rebate, it's a no-brainer. Just take that opportunity and go and move and take the break and pain and get it lower.
Hey, we've got about 10 minutes to go before we come up to the hour, and we haven't really dealt with any of the questions that are coming in from people out there watching and listening. Let's just deal with this quick one from Kieran. Louise, earlier you mentioned being able to get 2-day approvals, and Kieran is saying 2-day approvals, really? Is that possible?
Absolutely. I've got 2 this week. So if you have the right documents, if you're not putting it together properly, and we ask the questions first so we know our clients extremely well. Like I said to Chris, we're doing an assessment on your whole life, not just a one-off, so we want to know everything, and then we can put you at the right lender with the right suggestion, and the problem is people don't provide documents. If you don't provide them, we don't submit them. So we only submit when we're ready to go and we know we'll get an approval. So, yep, no question. It can be done easily.
Can be done. And I would point out, Louise, that you were acting for me for some of my personal investing quite recently. And we went through a process with one of the big 4 banks. They were an absolute nightmare. Eventually, we actually gave up and went to one of the second tier lenders. And we did get an approval. I think it was in 3 days. It was very, very fast. Once we switched, a little bit hungrier for your business, I think, and
better processes, understanding what the lenders, what the borrower's trying to do. They actually have a conversation with you. I've had two calls this morning from different lenders saying, "Okay, Louise, just explain to me about this, about that." I go, "Yep, that," and they go, "Yep, no problem." Bang.
They might not have the backlog of a major bank as well. The backlog of a major bank in some cases, especially with self-managed super fund, as Alex mentioned before. There's sometimes nightmares to get across the line.
Yeah.
As well, so
you have to be very careful on those. There's no quick way. Yeah.
We've got a general question here from one of our viewers today, referring to the comments about fixing. And so, what term would the panelists recommend for fixed interest loans? 2 years, 3 years more?
Yeah, the keenest rates are at 2 and 3 years at the moment. And there's a reason for that. With fixed rates, the banks ultimately price in how they're going to win on them. If you are sure you're going to keep that property for 5 years, I wouldn't hesitate if you can get a low enough rate and lock it in and just know that that's where it's going to be. But most of them, we're doing 3-year fixed rates.
We say 3 to 5 as well. We've got the same answer, 3 to 5.
Sorry, what was that, Chris?
We say 3 to 5 as well. We're advising the same thing, depending on the same. 3 to 5 is what we advise fixed rates.
Okay.
Case by case, though.
Any other views from the panel about that? I think it's quite a key question at the moment for a lot of people.
It just comes down to, Terry, your strategy. And again, what's the purpose of you and what's your time frame with that property? And if it's a long-term time frame and a long-term strategy, then obviously, again, it comes down to doing the numbers. And if you're comfortable and it gives you a sense of assurity and comfort in that process, then go for it. I mean, I locked some interest rates in a year ago at 3.5, 3.6 or something like that. And I was comfortable. I knew that it probably might go down a bit more, but at the end of the day, it just gave me a surety in what my repayments were going to be, and I was happy with that. So it's a case by case and strategy.
So
I think it's about balancing risk. I mean, Louise touched on it as well. How long you want to keep the property for, and it's balancing that liquidity risk and the payoff. I mean, Chris said it best. I mean, property is a long-term proposition in any case, 7 to 10 years minimum. But you're looking at fixing it for 3 years plus. It's going to be some pretty heavy exit costs. Working with a client recently on a fixed loan, and there was an exit cost of $10,000 for one loan. And obviously, if you're refinancing, you might be able to take advantage. And, you guys talked about that kind of making up for that. The disadvantage of that, we're getting a bit of cash payment from one of the majors, and then with the saving on interest rate. But it's managing that liquidity risk. So if you're saying, well, if I need to sell in the short term and I'm going to be hit with 10 grand of exit fees, then maybe that doesn't fit your strategy. But if for most people, it's about holding property long term, and if you can get cheaper money, then it makes sense to me.
Here's a question I'd like to get all your thoughts on. Everyone is talking about the opportunities that are out there, but surely there is still a lot of risk investing in times like these. What would your responses to a client with those sorts of viewpoints be?
Well, as I said before, Terry, Queensland, I believe, is about to have the greatest boom ever, because if we can't, those 1.3 million people, Aussies can't cruise, God help us, and the rest of them can't fly overseas, which we want to. I know where I'm going for holidays, and I'll be booking it and ready to rock and roll as soon as they open the doors. And I know this happened to me back in the early 2001 when Ansett went down and September 11 happened. And people said, oh, your hospitality business is finished. And I tell you, people got in their cars and drove to Queensland by the truckload. You couldn't get them there fast enough. So believe me, there's plenty of opportunity. And I think locally, people will be holidaying and they'll be buying. And all the hospitality workers who haven't got work in the southern states might be heading north. They'll need rental properties. So make sure it's all available for them. We're coming.
Okay. Any other views on that general question about opportunity versus risk?
I think there's always risk. It doesn't matter what market you're in, you can still lose money on property if you don't do it right.
Mm-hmm.
You don't get your structure right, so you need to have that conversation with your accountant. You know, if you don't get the right sort of loan, you know, a lot of people just chasing the cheapest interest rates. It's not just about the cheapest interest rates. It's what's right for you with the flexibility of what you're wanting to achieve. People can lose money all the time. And again, that's why I think it's so important to have the right people who are professionals in their industry working with you to achieve those goals. End of the day is do your research, make sure you've got the right people around you, and you can mitigate most of that risk. Again, going to areas where, you know, vacancies are going to be low, where there's population growth, where there's infrastructure spending, and continue spending. Yes, things might be on hold at the moment. There might be a little bit of a hibernation happening, but you know those areas are going to continue to come back to life. We're in that winter has come, you know, but spring will happen, and you know, yes, unemployment might be a little bit higher than what it was, but if you go into those key areas, I think you mitigate a lot of that risk.
So Alex, what are your thoughts on that?
Yeah, look, I think a good way to mitigate risk, I mean, it's kind of been touched on. I mean, obviously the fundamentals are follow population growth and follow who's got the money. But Louise actually mentioned this at the start of the presentation, and that is, you know, she said that first home buyers, she's doing a lot of first home buyer loans, and follow the spending. If you're an investor, look for where people are buying. Look at what markets are active. I mean, obviously, if competition's a little bit higher, that's going to mean that you're maybe a little bit less, you know, the ability to secure an absolute bargain is going to be a little bit limited if you've got more buyers to compete with. But there is that safety in numbers. So if you're looking at people that are still buying properties and they've got money, they're cashed up, they've got all those incentives that Louise mentioned, then ride their coattails. And that's what we want as an investor. So for me, you know, when I see, you know, it's predominantly owner-occupiers that I'm competing with anyway, even when I'm buying for investors. And to me, that I know that I'm in the right area, I'm doing the right thing by the client, I'm in the right areas when that's happening. So that's, to me, the key way to mitigate risk, and that is see who's got money, but also diversify as well. I'm seeing, you know, the regional centres throughout Australia are still humming along. I mean, certain regional areas, it's unfazed. You know, I have some conversations to the agents down there about toilet paper and funny things like that we're all seeing due to the situation. But in terms of, you know, the stability of the market, they're unfazed, they're plodding along. But I also think that Chris actually touched on this, and that is that, you know, lifestyles might change. So I think that if people are going to be working from home, I mean, my partner works for a multinational, she's now working from home. The entire company's been moved to working from home. So if that's more prevalent, then, you know, I think that some of the regional areas that are more affordable are going to be more attractive for buyers. So to me, that's a way to mitigate risk, but also obviously having those cash buffers and insurances in place.
Don't be greedy. That's what we're talking about before. Don't be greedy.
You know, we've all touched on this, and regional's been great. We've been in regional Victoria since 2014. South East Queensland, we've got a heavy focus. But what we're actually doing is we're looking for cashed up developers to do some great incentives for our clients. We've negotiated now as close, and I agree with Danny 100%, in any investing there's an element of risk. So doing your due diligence and having the right team is paramount. We've negotiated as close to risk-free investment possible in today's market, and I'll give you some of the incentives that we've been able to negotiate. people are concerned about two things predominantly in what I've seen now: job loss and the property going down in value, which I don't really see that as an issue at all. We've negotiated with our developers that if the client loses their job, they can get 100% of their deposit back. No questions asked. Second thing, if the property land price goes down in value, they'll guarantee that price and give them the difference, because these developers will back their product to the T. These things I could not negotiate before. Rent guarantees, all these top-ups that I did not have the opportunity to negotiate 3 months ago or even 2 months ago, I can now negotiate with developers. So I'm going to my clients and saying, what are your main concerns? And we've listed 4 or 5 of them. I've gone to the developers and I've actually said, this is what I need from you now. Now's the time that I need this. Do you back your product? Are you confident this will happen? Yes, put this all in writing. Then I've gone to my clients and I've said, this is what I've got in place. And they go, they're ecstatic. I could not do that eight weeks ago. There's no way they're going to say to me, Chris, you want this, this, and that. No way. But now I'm using this as an opportunity to negotiate for my buyers.
That speaks to a lot of questions that are coming through from listeners worried about valuations, particularly new property, off-the-plan property. And Arthur's asking, are valuers running scared with COVID-19 on new investment properties off the plan? And what are we finding?
Well, inexperienced values, I think Louise said it, that are just getting into the market don't understand that they might be undervaluing something, but it also comes down to how many, how well they know the actual market. But like Danny said, in South East Queensland, we haven't seen a difference in the valuations. When we're looking at Geelong, Ballarat, we've sold a lot in, and South East Queensland, the valuations are still coming extremely strong.
But as I said, you've got to be sure you have that clause in an unconditional contract. Otherwise, make sure you cover yourself for your bank val, because it's not the developer's valuation, even if they're topping up the difference. It's how much you can borrow, and you can only borrow as a percentage of the actual value that the bank gives you. So be warned on that.
What we're doing, which we found we don't do a lot of off the plan. We tend to be more house and land in our stuff, but we've had a couple of clients with some off the plan apartments or townhouses. We've actually spoken to the developer, and we've actually had a deed that runs concurrent with the contract, where they're actually allowing the client to then do their finance within 90 days of settlement.
Oh, that's
good. So it then protects the client from the fact that they're not going to lose their deposit. There's not a concern there, because we all know that even if you have a full approval, it only lasts for 3 months, maybe 6. And if
that's right. That's a game changer, Danny.
And I think so. We've put this in play with our developers who we know, and they know our clients, that we have the conversation, so they can still technically go to their bank and say, look, here's our unconditional contracts, or here's our contracts, but we've got a deed of variation that sits alongside the actual contract, with the solicitors put together, which then protects them. And we've actually got one at the moment for a client who's doing one through their super fund, and it's settlements in about 60 days, and we're just in the process of getting our finance all pre-approved, finance all formally approved, and so there's no risk to the client at all in that regard.
And Danny, question to you: could you have done that 2 months ago or 6
well,
weeks?
We did. No, we actually did this. We did this 5 months ago, 6 months ago.
Oh, so you've had this going for quite some time.
It's the only way I'll do it off the plan, because it's the only way to protect the client. In our perspective, in that way, because at the end of the day, the client has to.
Idea. It's a great idea, because that I've often in the past had problems with valuations coming up to settlement. Clients' conditions might be the same. Always amazes me if clients then go change their job. How many people do this? They buy off the plan and then they go, oh, Louise, I was working for so-and-so, but now I'm self-employed. I go, oh, I presume you've had that for 2 years, or no, you haven't. Oh,
well, we had one do that just recently. It's like
extraordinary. The only way I would never buy off the plan unless it was under conditions like you just mentioned, because of that problems that it can.
A bit of variation, get your solicitor to draw it up.
Brilliant.
And make sure you have the conversation with the developer, because developers do want to do deals now.
Yeah.
But we've always done that, and it's again just working with the trusted developers that you deal with.
And on that note, though, the other thing is people often think they can buy cheap and then sell. In this market, I don't think I'd be doing that. I don't like it at most times. I really hate doing bridging finance. I do them, but I don't like it. However, I wouldn't be selling in this market and then I would sell first and then buy.
Yeah.
Okay, everybody, we've actually clicked over the hour. We're 5 minutes over the hour, so we're at a point where we need to think about wrapping this up. I'd just like to perhaps give each of you an opportunity to make a statement to end with, and perhaps each of you in turn could perhaps just very briefly, what's the number one message that you would like to give to real estate consumers out there in these times to help them get through and perhaps make the best of the opportunity that's out there? Alex Dutt from Adviseable, perhaps you could go first.
Yeah, thanks, Terry. I mean, you touched on it yourself, and that is opportunity. It's a phenomenal opportunity out there at the moment. But also, as a buyer's agent, you know, I always say one of the most important skills that an investor needs to have is the ability to determine market valuation. And right now, with the market in flux and all the deals happening behind closed doors, as I mentioned, it is more critical now than ever to know how to determine market value and know how to successfully negotiate. Because if you're inexperienced and you're trying to buy property, it's really like taking a stab in the dark, knowing when the market's all over the place, and also not knowing, you know, all the extras that you can negotiate to work in your favour. So opportunity, take advantage of the property opportunities and take advantage of the finance opportunities. But I probably stole everyone's thunder because they're all thinking the same thing, but thanks for letting me go first.
Okay, Alex Dutt from Adviseable, a buyer's agency. Thank you very much for your contribution today. Danny Buxton from 000, what's the main message you'd like people to take away today? Briefly, if you can.
Very brief. Look, I think there's great opportunities out there. Be smart, build your A team, get your finance sorted now before you actually go out there. Make sure you're in a strong position with your work. Yet will pricing pull back? I don't think so, but because there is great opportunities out there, we've got builders who are happy to pull down their pants, so to speak, to work with people and keep their volume going, keep their trades going. There's that opportunity, and we'll come out this will end, and we'll come out much stronger. Do your research, and it's same.
Danny Buxton from 000 Property. Many thanks for your contribution today. Chris Christophe from Reventon, what's your main takeaway for people today?
Firstly, thank you to everybody for listening, to the panel, to Terry. Love being on the panel with you guys. My main takeaway is go for an experienced team that's seen many market ups and downs, because they'll know how to navigate through these times. People that can negotiate great deals for you. Have the A team, as Danny calls them, have the right educated team behind you that understands finance, getting a tenant, the right builder's terms. Have the right team behind you is paramount to anything. They can negotiate a great deal. Paul Reventon.
Thank you, Chris. Now, Louise Lucas, I know you always like the last word, so we're giving Louise Lucas, mortgage broker from the Property Education Company.
No, can I just share one story? Yesterday, a client called me out of the blue and left a message and saying, I just want you to know we are good despite what's happening in the market. And I called him back and he said, oh, thank God I did my refinance and I'm all sorted and you gave me a buffer and I'm all this. He said, because if this had happened at the same time last year, I would not be able to put food on the table for his family. Now, you can imagine that sort of comment makes my heart, I cried, but I'm like so thrilled. But what I want to send out the message is don't do any finance problems alone. It's only money, people. And just remember that there are more important things, and please get help. We are all good for that because all of us have had experience. And so please make sure, no matter what's going on in your world, don't listen to all the negative, get into the positive and get any assistance, because money is just money. It's an energy that we can, and we can always help and find a solution for you. So
it's about 100 years experience here for all the listeners. So there's so much experience on this.
It's probably people try to do it themselves. We're talking like you're spending over $500,000 to $1 million. Why wouldn't you bring and have the right people around you helping you in that process?
Hey, Chris, I think you're underestimating the years, sadly.
Thanks, everybody. Katie, now would be a good time for you to show that slide. We just want to put up some information about how people can make contact with the people on the panel today. If they'd like to follow up, ask further questions, and and perhaps avail themselves of the services available. So we're just scrolling through the contact details for Alex Dutt from Adviseable, Chris Christophe from Reventon, Louise Lucas, mortgage broker from the Property Education Company.
Old photo.
Last but not least, Danny Buxton from the 000 Property Group. Look, thanks everyone for your participation. I think it's been a great session, lots of great information, and we've had a lot of engagement from our audience today. In fact, there's some comments here from people saying, don't stop, keep going, but I think we're compelled to try and keep it as close to an hour as we can. We're actually gone for an hour and 10 minutes. Lots of great feedback. Excellent webinar. Thank you very much, everyone. Thanks to Terry and the panel. Thanks for organising, Terry. Valuable share. Awesome information, says John. So thanks for that feedback and thanks for your participation. Those of you, we weren't able to answer all the questions that came through. We usually don't manage to do that because there are always more questions than we have time. But please feel free to follow up with any of the members of the panel today. And also, you're also welcome to email me, Terry Ryder, advisor@hotspotting.com.au, if you'd like to follow up with comments and questions. Thanks again, everybody. Great session. The feedback from our audience today suggests they found it very valuable and would have liked us to go on talking all afternoon.
Yeah, we could.
Next time, we will. Next time. Thanks, guys. Thank you very much. Thank you, Louise. Thanks.
Thanks, everyone.
Thank you. Thanks, Terry.
Thanks, Terry.
Thanks, Katie.
Okay.
Thanks, Katie, for organising.
Thanks, everybody. This is Terry Ryder from Hotspotting. Over and out. We'll do it again soon. In fact, Tuesday evening next week, I'm doing a live Q&A, so you've got another opportunity to ask your questions. There were some questions today particularly about locations, which wasn't really what we're planning to deal with today in today's webinar, but on Tuesday evening next week, I'll be fielding questions, as many as I can in the hour on Tuesday evening next week. So that's it for now. Bye for now.
Thank you.
Thank you.
Hey, guys.
Stay safe.